Welcome to XM.com for today's Daily Market Comment by Haralambos Pisuros. I'm Christina Marujos. The US dollar traded slightly higher against most of the other major currencies on Tuesday, extending its recovery during the Asian session Wednesday. Although data showed that US retail sales rose less than expected in June, dollar traders refrained from selling the dollar, perhaps as core sales showed more resilience. Excluding automobiles, gasoline, building materials, and food services, sales accelerated to 0.6% month-on-month. Expectations about the Fed's future course of action have not changed much. Market participants are still expecting one more hike and a series of rate reductions throughout 2024. Conditional upon a 25 basis points hike being delivered next week, they are penciling in 150 basis points worth of rate cuts by the end of next year. This is likely to keep the dollar in downtrend mode, even if the current rebound extends for a while longer. Eurodollar may extend its uptrend towards the key territory of 114.85, which acted as a ceiling back in January and February 2022, but at a slower pace than it did last week, as some ECB members seem to be pushing back on bets for a September hike. Just yesterday, ECB hawk Klaas Knot said they will look closely for signs of inflation cooling down in the foreseeable future to avoid taking interest rates higher than necessary. He also added that a July hike is a necessity, but anything beyond that at most would be a possibility. Today, it was the pound's turn to be sold aggressively as UK CPI data revealed a larger than expected inflation slowdown in both headline and core terms. Although market participants remain convinced that a 50 basis points hike is more likely in August, they took off the table a decent amount of expected basis points worth of additional rate hikes, pricing in now only 100 basis points worth of hikes. Yet this is still a more hawkish view than what the market expects the Fed to do, therefore calling today's tumble in pound dollar the beginning of a major trend reversal is very premature. Wall Street closed well in the green yesterday, with the Dow Jones gaining 1.06% and marking its longest streak of daily gains in more than 2 years. Better than projected bank earnings seem to have added fuel to the stock rally that started back in October. However, the main drivers of this latest uptrend are tech stocks, and thus, investors may pay closer attention to the results of tech giants. Tesla and Netflix make the start today after the closing bell. This was a Daily Market Comment here at XM.com.